Hello students, how are you? In today's session, we are going to see what is the earning per share. Earnings per share IAS 33. Okay, this is not very rarely tested, not even included in this normally in syllabus. Even though it is included in syllabus, not tested in the exams. Okay, but anyway, we will see what is earning per share. Earning per share, basic earning per share is a profit attributable to the shareholders of the parent or shareholders divided by weighted average shares, weighted average number of shares, right? There are options of issue of shares during the or day after the reporting date and before the uh, approval date, right? There may be a full price issue, bonus issue, rights issue would have taken place. Those before, if it is has taken place before the end of the after the reporting date and before the what you call approval of the date, right? Then you have to uh, do the calculation and restate the value, right? They says the number of if bonus issues or right issues occurs after the reporting date but before the date of approval of the accounts, earnings per share should be calculated based on the number of shares following the issue. Number of shares following the issue, right? Whatever issues take place, we have to consider, right? When we are calculating the earnings per share, right? And there is a diluted earnings per share calculations also there. So we can go for the question, but when we are doing the question, you can understand properly. Okay, sorry. Question number 1, right? Basic earning per share, right? Mr. Ram makes up its accounts to 30th June each year, right? They used to prepare the accounts. Their year ending is 30th June, right? 30th June, year ending. Year ending is 30th June, right? And on 1st July 2015, 1st July, 1st July 2015, right? After the reporting date, right? 500 million ordinary shares were there on 1st July. The 500 million ordinary shares were there. 500 million ordinary shares, right? We are there. Profits for the year to 30th June 2016. 30th June 2016 profits were how much? Profits were 250 million. Profits were 250 million. At the beginning of the year, shares were 500,000. On 30th 6th, end of the financial year, the profits were 250 million. Right? There were no preference shares issue. Right? Calculate the basic earnings per share. Right? Share capital is not changed during the year. A is share capital is not changed during the year. That means earnings per share basic basic is right. How much the earnings? What is the earnings? 250 million. What is the average shares? 500 million. 250 million divided by 500 million, that is 50 cents per share. Per share, right? 50 cents per share. Okay. And in the B, an issue of 50 million new shares at full market price on 1st August 2015. B, right? On 2015, they are issuing the 50 million shares, right? 50 million, 2015. What is the date? 1st of August, 1st of August 2015, they issues 50 million of shares, right? Shares, right? 50 million of the new shares at full market price. There is no change in the market price. So we have to take, it is weighted average method has to be used, right? Weighted average, numbers of weighted, right? There's a full price issue, right? So date, right? Number of shares, right? Date, number of shares, number of months, number of months, number of months, and weighted average price, weighted average price, right? Weighted average price, right? Okay. Date is 1st April to 1st of June, 1st of June 2015 to, right, 1st of August 2015, right? 1st of August 2015. And from the 1st of August 2015 to 30th June 2016, right? 2016. Number of shares, first half we have a 500 shares, no? 500 million shares, 500 million shares. Thereafter, on the 1st of August, we are issued with the 50 million shares, then 550 million shares, right? 500 plus 50 million, okay? That is the 550 million shares. Understood? Number of months, this is 1 month, right? 1 upon 12, 1 upon 12, right? 1 month. July, 1st July to August, August 1st, that is only 1 month, right? Second one is 11 months, from August to June, next year June. That means 11 upon 12. Right? Then we have to multiply 500 million into 1 upon 12. That is how much? 42 million. Right? Sorry. Yes, 42 million. 42 million. Approximately 42 million, right? It will come like 41 point like that. But I have put approximately 42 million. Right? 550 divided by 12 into 11. That is 504 million. Approximate one, right? 504 million, right? So total shares 546 million shares. 546 million shares. This is the average shares. So we'll earnings per share. Earnings per share equal to, right, 250 million 250 million divided by 546 million. That is equal to how much? 0.458. 0.458 per share. Okay, that is for answer for the B. Next one is C. C. Right. C. C. A 144 bonus issue. 144 bonus issue occurring on 1st November 2016. First 1st November 2016. Bonus. This is bonus issue, no? This is ordinary share. This is bonus. Fully paid. Paid. Right? Bonus shares. How much they issue? Bonus shares? 144. 144 shares. Okay, 144. Okay, so on 2015. Right? That is working. Number of shares on 1st of, sorry, 1st of July 2015, right, equal to balance shares to 500 million, right, on 1st of July, 1st of November 2016, 1st of November 2015, right, 2015, there is a bonus issue. Bonus, that is how much? 500,000, 500 million divided by 1:4, no, 4, right? 500 million divided by 4. That is 125 million. 125 million. Then total is 625 625 million. Bonus, no, there is no value. Then earnings per share, earnings per share equal to 250 million divided by 625 million, right? So that is equal to how much? 0.4 per share. 0.4 per share, right? 0.4 per share. Because in the bonus issue there is no value, so we don't need to go for the detailed calculation. This is enough. This is the way of calculation, right? Another one is D. Question number D, right? D. Question number D. One, there is a 1 for, right? There is a 1 for 5 rights issue on 1st February 2016 held at 1.25 price, right? 145 rights issue on February 1st of February 2016. 1.5 rights issue on 1st of February 2016 took place, right? Held at 125, at the rate held at 125, right? 125, right? 125. Immediately before the rights issue was 140. Before the 140 divided by 125, right? So rights issue 145 rights issue on 1st February 2016 held at 125. The price of the share immediately before the rights issue was 140, right? 1 before price is 140, right? So we had to calculate the average price of the share, right? Average price of the share, right? Rights issue how much? 500 million shares rights issue, that is 500 million shares divided by 5, that is equal to 100 million was the rights issue, okay? And average price is 4 shares into 140, sorry, 5 shares, sorry, 5 shares into 140, that is equal to 7, right? 1 share into 1.25 equal to 125, 1.25, then 8.25, So 8.25 divided by 6, it is equal to how much? It's equal to 138. 138. Right? We will say date, right? Number of shares, number of shares, number of months, fraction, fraction, and weighted average price, right? Weighted average price, right? Here, right? Total shares will be 600, right? Date 1 July 2015 to 30th January 2016, and 1st March February 2015 to 31st March 2016. That is the dates, no? 2016, 1st February. Rights issue on 1st February 2016. Right? So, this is one date. How many shares we held up to January? 500 million shares. 500 million shares. From February to June. February to June, how much? That is 600 million. 600 million. That is 500 plus 100. Right? Months, how many months? July, August, September, October, November, December, January. 7 months. 7 upon 12. Then balance is 5 months. 5 upon 12. Fraction. Fraction is, this is the fraction. Price before and price after. Price before 1.40. Price after 1.38. This is the price factor. Fraction. Price before and price after. So if you calculate this one, if we solve this one, 296 million, and other one is 250 million. 250 million. Then 546 million. 546 million. Right? So earnings per share equal to 250 million divided by 546 million, right, equal to how much? 0.458. 0.458 per share. Right? This is the amount. Same amount. Right? per share. This is the D answer for question D. This is the fraction price before the average price we have to take. After price is average price we have to take, because 540 and 525 for the last 6 months is average price, and before that is the what you call 145 1.40. Okay, so I think you would have got the picture, and I will move into the diluted earnings per share, right? Diluted earnings per share. Diluted right, earnings per share. Diluted earnings per share, right? Question number 3 in the tute, right? Mr. Dates makes up his accounts to 31st December each year and has calculated the basic earnings per share based on the actual shares of 1 million and earnings of 500 million for the year ended 31st December 2015. Right? It is on 31st of December 31st December 2015, right? What is the shares they have? They have 1000 million shares, right? 1000 million shares, and year ended profit is 500 million profit. This is profit, and this is shares, right? So convertible debentures on 31st December 2015 had an issue of 10 million, right? On 31st December they are issuing a debentures, convertible debentures, right? Convertible debentures. They are showing a convertible debentures 10 million. 10 million. Showing at 10 million, right? Of 5% convertible to loan stock. Convertible to loan stock. The loan stock is convertible at the following dates with the following items, with the following terms: 31st December 2016, 125 shares for every 100 shares of loan stock, right? And 31st December 2017, 120 shares for every 100 loan stock. Tax at 20%, right? Tax at 20%. 5 million at the rate of 5. Tax is, right, 5 million. 5%, right? Share options are granted 100 million options at the same date. The option price is 250, but the average fair value of a share is 4 rupees 4. Calculate the fully diluted EPS for the year ended 31st December, right? Basic EPS, we will calculate basic EPS is 1000 million shares, 500 million profit, right? 1000 million shares, that is 0.5 per share. Share. This is the ordinary ordinary EPS, right? Ordinary EPS, right? EPS equal to 500 million, right, divided by 1000 million plus extra profits plus extra shares, right, plus extra profits and extra shares, right. We will say extra profits first. Extra profits, that is here extra profits. Debentures, 10 million debentures, 10 million debentures into 5% interest, 5% interest, right, into 1 minus 20%, that is our tax rate, right, that is equal to extra profits equal to how much? 10 million 400,000, sorry, 400,000, 400,000, 400,000 K, right. Extra shares, next step is extra shares, right, extra shares is it is, they says 1 for, what is the shares they give? The loan stock is convertible following dates with the following item. 31st December 2016, that is 125 shares for every 100 rupees for loan, right. 31st December 120 shares for every 100 rupees loan. So we will take 10 million, 10 million shares divided by 100 shares into 125. For 100 shares we will get for 125 100 shares we get, right. Then that is equal to how much? How much? 10 million divided by 100, right, that is 12 million, 12 million and 500,000, right, 12 million and 500,000. Then we will say free issue, free issue, right, free issue. In the free issue, what they says, share option also granted 500 million options at the same date, right. Share under the option, right, shares under the option equal to 100 million shares, right, 100 million shares, right, under the option, right. One, the The option price is 250, but the average fair value of the share is 4. Average fair value is 4, but the price is 250. That is shares at the market value. Shares at the market market value, that equal to, right, this is 100 million. 100 million, market price 4, right, then received price is 250, right. So the value is, right, that is 62.5 million, right, 62.5 million. If you deduct this from this, 37.5 million we get, right. So EPS, under the EPS calculation, we have to add the extra profit 400,000 K, right, K, and the extra shares 12.5 million, 12.5 million, plus free issue shares 30, rights issue, and free issue is 37.5 million, 37.5 million, right. So it is equal to 500.4 million divided by 1050 million, right. That is equal to what is the amount, 0.477, that is equal to 0.477 per share, right, right. These are the workings, right, these are the workings. Okay, so I think you would have got the picture, right. Extra profits, EPS is equal to this amount plus extra profits earned and extra shares earned. These two are extra shares earned, this is the extra profit, so divided by average weighted average number of shares, right, profit attributed to the shareholders. This is what we have, right. So I don't like to spend more time in the earnings per share because this is not tested in the examinations. Okay, so I hope that you would have got a good picture on this earnings per share, right, IAS 33, and I'm going to conclude this lectures, and I hope to meet you in another session. Okay, thank you.